Hello, everybody, and welcome for our last session of the day, Navigating Fundraising in Uncertain Times. We've got with us today Francois from Palladium Impact Capital, Megha Jain from Insitor Partners, and Maneet Goel from Laltin, online marketplace for Indian artisans. Over to you, Francois.
Thank you, Maithili. Let me share my screen and hopefully this works well. Do you all see the presentation mode? Great. So yes, as Maithili pointed out, today we want to talk about how to navigate fundraising during the uncertain times that we are facing, and the implication that some of the travel restrictions and other restrictions and disruptions that COVID has brought to the capital raising process that you might want or be looking to run in the coming months or year. So the way we structured this session is we'll have a very quick presentation that I will run through, and then a panel discussion with Megha and Maneet to discuss how COVID has impacted their respective operations, one from the investor side and the second on the enterprise side, to draw lessons learned from each other on how we can adapt to each other's changes in the processes as we're trying to interact with one another. And I should say before I also move on that some of the lessons learned that I'll share in this presentation part are drawn from our own experience at Palladium Impact Capital. Palladium Impact Capital is, for those who don't know us, is an impact investment bank. So we support social enterprises, mission-driven financial institutions, and impact funds on their capital raising needs. So for the last year, we've been in the market with one early stage social venture, two impact funds, and one large microfinance network. So we've had a few different kind of points of view or vantage points on how the fundraising process has been impacted by COVID, and this is what we'll relay here. So without further ado, let me start diving into the presentation. So obviously, I don't think telling you all that fundraising has been impacted by COVID is a surprise to any of you. Yet at the same time, as we're looking to address some of the issues that have been brought up by COVID-19, the need for capital for social enterprises and impact-driven organization is more prevalent than ever. So finding a way to address the challenges that have come to directing capital to those enterprises is what we'll be looking for. Global travel restrictions, social distancing, office closure hours, and canceled events and all that have disrupted the way that investors normally find or interact with potential investees. So, and because they are now unable to do that the way that they were used to, they're resorting to kind of alternative ways, right? And everybody's learning along the same way. So hopefully we can come out of this session with a few tips and again, lessons learned that will help you navigate these new ways of interacting. But let's talk a little bit about what are some of the key challenges that investors are facing in this context to kind of understand how to run the process. First is, and that's not specific to social enterprises, but is the fact that COVID-19 has brought about a lot of uncertainties around markets. And so adapting to this uncertainty is difficult for many investors, right? Because one of the challenges that they face is that the uncertainty affects their ability to assess risk and set investment terms. And so if they can't price the risk, they won't invest. The other thing, and that's more specifically for social enterprises, though not only, is this lack of human contact. At the earliest stage, capital raises, it's a lot is about the story and how you convey that story. Are you able to convince an investor that your vision can they back your vision, and can they back you also personally as the leading team, right? Do they trust that you'll be able to execute the vision? And without meeting, that can be quite difficult. And so investors with no previous relationship with you may find it extra hard to not only understand your vision, but understand also the impact story. In kind of pre-COVID era, a lot of the times the impact story would come from site visits with clients. Maybe you can talk about this a little bit later, but I don't know if some of the investors you've raised from asked to meet some of the artisans that you work with, right? Like that's usually how impact investors were interacting and getting a feel for the impact story. And that is not possible anymore. The lack of on-site visits and kind of the difficulty of buying into that impact story also has another side effect, which is that then they might resort to more financial first type of analysis of a potential deal. So placing greater emphasis on financial statements, and if you don't have those financial projections and your cash flows and so on. Whereas before there might be a little bit more of a balance between the impact story and those considerations. So, given those challenges, what we found is that impact-driven organizations are at a greater risk of not being able to attract funding than some of their more traditional commercial counterparts. How do you address that, right? Sorry if this sounds very grim so far, but there are ways you can address it. The way to do this is to be at the forefront of leading the process as much as possible. Be as proactive as you can, avoid being reactive to the investor. Granted, every investor that you'll interact with has their own processes that they need to follow, and you won't change that. But within the constraints of that process, try to lead in orienting the discussions, and as much as possible, kind of lead the MC the process, if you will. How do you do that? Is what we'll also be talking about, and what is generally the steps in the process. So whenever we take on a mandate with a social enterprise, this is generally how we talk about the process of fundraising. First, you start by preparing, you make sure that you have your story right, you make sure that you have all your supporting materials ready, and kind of your value proposition properly honed in and highlighted. So we'll not talk about this because that part hasn't changed that much. It's still what you should do. And it's more what we'll be focusing on is that second and third step within the red rectangle here on how do you market to investors virtually. So and especially focusing on the pitch. And then how do you run a virtual due diligence, which will be very different than what you would do with an in-person due diligence. I won't talk so much about the offer management of the bid and the offers and valuation and so on, because that is super context specific. So there's very kind of limited learnings to be drawn across that can be extrapolated to the field across, except to say that perhaps on the valuation point, what we've heard from a lot of investors when talking to them is that there's now a little bit more of a premium on fundamentals analysis as opposed to some other sectors that might have seen like crazy valuations because of I don't know, like general trends of other deals that have been seen in the market that was kind of creating this snowball effect of really high valuations. So people are kind of stepping back a little bit and stepping away from that, going back to more fundamentals. So something to keep in mind also in the way you're presenting your numbers and managing your expectations also in terms of kind of what you can offer to investors. But let's focus specifically on the the pitch process first. So here, I mean, before I go into this, the first thing I should say is pitching is always hard, right? It takes a lot of practice. It's a muscle you need to build. You need to know your talking points on the tips of your finger and make sure that before you get into the room with an investor, you know what are the points you want to highlight for that specific investor and make sure that you bring those out as much as possible. So that's general true. It's still true, and it will always be true, right? But in the context of a virtual due diligence where you don't have the benefit of being in the same room and can feel out a little bit the reactions that some people are having to your pitch, the need to keep the energy super high and continuously engage with your audience is super important. So it's no surprise, and I'm sure some of you at home are guilty of this right now. It's easy to check out on Zoom, right? Like it's easy to start being distracted either with email notifications coming through or a text or a news alert. So you want to avoid being in a situation where you're just presenting. You want to have more of a discussion with the investor throughout to keep this engagement level and keep the focus on you and the story you're trying to tell. As I mentioned, also kind of even more important than ever, tailoring the points that you're highlighting, right? So if an impact investor is particularly looking at a dimension of impact that you're catering to, make sure that you highlight that. If another investor is more concerned about technology and you have a technology angle, make sure you highlight that, right? So kind of tailoring the messaging and highlighting those points throughout is good. Also, another way to engage throughout the pitch is to make sure that you ask questions to them, not just presenting and if they have questions for you. If you know that they have a specific thematic expertise that is relevant to what you're offering, probe and ask things so that you can get that conversation going instead of just waiting at the end for the conversation. So that's the first one. The second one is a little bit of a logistics one, right? Like you want to set the scene as appropriately as possible to avoid any distractions. Like I'm seeing right now, there's glare in my glasses. That's not good, right? Like you want to set the lighting, you want to set the background, you want to get as many distractions away so people focus on what you're saying. And to the extent that you can, and if the investors are open to it, one thing you can ask them to is to record the session. So you can also learn from your mistake. And actually, this is an advantage of running a virtual pitch session because you can listen to it again, make sure you were hitting the right points, what parts of the pitch didn't resonate, which parts were you least comfortable with, and you need to review kind of what your key talking points are. So actually, in some ways, that part can be useful as a learning tool if obviously the investor is okay with it. And then finally, and then kind of the point of that last bubble is address the elephant in the room, right? COVID likely had an impact on your business. And so don't wait for the investor to ask for what that impact was. Be upfront about it. And use the fact that you're upfront about the story to frame it in a way that shows how resilient you've been to those to that impact, right? So whether you changed your product or you changed your delivery process, or whatever ways you've adapted to this, and how that's positioned you well to kind of grow either in this new world or post COVID as things reopen. That's something that they'll want to see. And also be ready. Maybe they'll ask for financial projections that are specific to the impact of COVID on your business. And do you have any scenarios that explain that, and preempt a little bit some of those asks? So that will show that you're prepared and understand how it's impacting your business. So that's for the pitch. Hopefully everything went well. And now investors want to move to due diligence. And that part, I think, as I alluded to before, it used to be that, that depending on the investor, but often they would come to meet you, maybe stay a full day, maybe up, even 3 days sometimes, to meet with the different departments, depending on how big, obviously, your company is, and meet with the different heads of team, do site visits again with the clients to see, to have a feel for the impact. All of that is very difficult now, or impossible. So how do you address that? So it makes the preparation pre-due diligence even more important than ever, right? So you need to, one, provide very early access to the data room so that investors can get familiar with it, and can prepare more targeted questions, ideally, so that you can have a little bit more meaningful types of discussions online, given that that some of the normal interactions that would otherwise have happened in the room are not possible. Make sure that your data room is well organized, and that goes for any in COVID and post-COVID. You want to avoid investors having to look for what they're actually trying to find in the data room. So maybe create an index or a structure that's very straightforward. And then, especially in COVID, but always also consider using a dedicated data room service provider if possible, because that will give you some insights in what they're looking for, right? What are they paying attention to? Which documents are they opening or going back to? Because that way you can preempt some of the questions too. And then plan just as I mentioned before, very well ahead of time. Schedule the meetings in ways that work for your different time zones, and ask the team to prepare maybe presentations so that you can also frame the discussion better. The other advantage that preparing presentation has is that you can review with your team before, so that the talking points that they might not have thought of, but you as the founder or the CEO of the business, you want them to highlight. So it gives you a little bit of a preliminary chance to shape the message. During the due diligence itself, it's very important to make to guide the investor through the different meetings. So, very kind of straightforward, make introductions, let them know what the specific meeting is going to be about. Are you talking about operations, about finance, about impact, and so on? Kind of be very targeted, and actively lead the discussions with your teammates. But also allow time for breaks and kind of a little bit more informal interactions. I think we talked about the fact that a lot of it is relationship based, and can you build that trust? So, use those downtimes in between sessions or in between meetings to have some of that social interactions that would normally have happened over the coffee break, for example. Another thing to think about, and if that is possible for you, is to do virtual meetings with clients. This is something that we did for our microfinance client that I was mentioning earlier, and that was super impactful because we were able to see that the investors were able to get a feel for the interactions of the loan officers with their clients, even though they weren't in the room with them. It helped kind of validate the impact story that they were telling in the boardroom, which is, otherwise you don't have visibility on. And then very, very quickly, because I want to move on to our panel discussion, but once the DD is done, the work is not done. There's a lot to do to follow up and be, again, proactive about following up, and in sending thank you notes, updating presentations, sending recordings. Again, if some of the team members weren't able to attend all of the sessions, investors will appreciate that. And then, yeah, just be super responsive in following up. I see already a quick question with regards to kind of the step in if people don't want to proceed from the pitch to the next step. And I'll give my own 2 cents on this, and then I'll ask the question to the panel a little bit later. But my experience has been that a lot of investors, if the first reaction will be to give kind of a little bit of a blanket answer about kind of what are some of the key points of why they didn't want to go forward. But if you press and if you ask for honest feedback, I found that most people take the time, either through an email or a 15-minute call. Just give me the honest feedback, and most VCs will, at least that I interact with in the impact space, and I see Mega nodding her head. I think people do that. So but you also have to be in a place where you're willing to accept that feedback, right? So you're most likely not going to change their mind. So don't come to that feedback session all still in pitch session. This is now a little bit different. You're taking feedback for your future pitches. I think investors generally don't like when you're coming to those chats with kind of an underlying agenda. But with that, I want to switch to the panel portion of this discussion and get the other perspectives around the table. So kind of the investee and investor on how COVID has impacted their operations. So as Maithili mentioned before, we have on the line Mega from Insitor Partners. Well, actually, Mega, why don't I let you introduce Insitor Partners and tell us a little bit about how COVID has impacted both kind of how you looked at the pipeline, but also generally your investment process to get us started.
Sure. Thank you, Francois. I think the presentation was very interesting, and you presented some really valid points, from even thinking from the investor point of view as well. A little bit about myself. My name is Megha, and I work for an impact fund called Insitor Partners. We are a Singapore headquartered fund, and we invest in South Asia. So apart from investing in India, we also invest in 3 other geographies, which include Pakistan, Cambodia, and Myanmar. We've been in India for the last 10 years now. We've done about 9 investments. We've also done 2 exits, and we've invested across sectors. So we've invested in healthcare, we've invested in education, we've invested in financial services, we have invested in energy also in the past. We are early stage, so we typically like to come in at a Series A kind of a stage, but very happy to do a late seed to a Series B kind of a investment as well. We are impact focused, so we look for business models that impact, the low income community in way of providing accessibility or affordability in terms of a product or a service. We are very, very excited about the Indian market and the potential impact that these innovative startups can create, in a long-term basis on the low-income communities. So we have a very strong thesis for investment in India, and we are going to be here for a long haul now. Coming to your question now, Francois, if I look at the last 10 months, there have been stages, in which the fund strategy as well as the VC investment process really has evolved. Just taking a step back, okay, going to the March 2020 kind of a time period, when everybody was taken by surprise with the lockdown and we all were adapted to, new ways of living, working, collaborating. And that was the time where there was also a positive lag, from the investments that were being, investigated by the investors in the last 4 to 6 months, because that's typically the average time period for venture capital investment as well. During that time, we see little activity as such, in the next 4 to 6 months, I would say from March to September, where the funds were really focusing on the portfolio, being in the venture capital space or the early stage. We all were very actively working with the companies, trying to help them in business continuity, trying to help them in overcoming the obstacles that were presented by COVID in different sectors. We were doing a lot of in rounds, so if the external activity was not there, there was a lot of internal activity happening. There were bridge rounds, there were additional equity fundraising rounds that were happening in order to grow the company and, for some of the early stage companies, really to keep them afloat. So those were interesting times. And I think during that particular time period also, we also got very accustomed to working online. We had our work infrastructure in place. And I think August, September was a time period really when the investment activity started really picking up. And, if just from a timeline perspective, I have to look at the processes since last October and last August and September, I would say that, the timeline really has crunched, at least for us. So, what we have seen is that the processes have become more efficient because, there are no issues related to the traveling or the scheduling. They have also changed, interestingly, from a very cultural and technological point of view. So there have been changes. It's been a very interesting journey. I think there were moments of panic. There were moments of eureka, both in the portfolio management as well as the investing side. Over to you, Francois.
And maybe just a quick question before we I ask Manit a little bit the same question. To what extent do you think that these changes, so like the change in the culture, the adoption of technology, and kind of so some of the ways that you've adapted to this new context, to what extent do you think that will perdure? Like, is this something that you'll keep doing afterwards, or is this temporary? And generally, not just you, what do you think the field will also go back?
Sure. So that's an interesting question. Let me look at it from two sides. Okay. So, when I'm investing, there are essentially two things I'm doing. There is the whole due diligence aspect, which is a more technical in nature. I'm looking at the track record of the company, I'm looking at the strategy of the company, the operations of the company. And then there is another whole cultural aspect, where I'm trying to evaluate the culture of the team, the co-founders, etc. So I would say that in the first aspect, I think things have become more efficient. I have seen entrepreneurs adapt to the new reality. They have the data rooms ready. The data is structured very well. Even for a first conversation, you would see a lot of entrepreneurs preparing proper pitch decks. There would be videos showcasing the office, the on-site, etc. So I think that's something which is very positive and which is going to continue as well because we've gotten into that mode of efficiency. The cultural aspect really is something which has been very tricky. At an early stage, making a decision of a company is as much about a track record and strategy as it is about, the cultural aspects. When you are in a room full of investors, in a room full of, the team and people, you learn a lot more things which are not there on the paper, right? There are subtle cues which, I personally have really missed, during the investments that we have done in the past few months. Uh, we have tried to supplement it through various ways, like, reaching out more to the industry segment, trying to do more background check, trying to understand the team from other people's perspective who have worked with them in the past, etc. I think that aspect would have to go back to the normal, those meetings cannot be really supplemented by any technology. So I think there would be a mix. The first aspect, efficiency, would be there to stay, and the cultural aspect would go back.
Yeah, thank you. I think that's a great segue to ask Manit a little bit how one to describe a little bit what you do at Lauten, and then also how you've adapted to some of those changes. And when you think about interacting with some of these investors, how do you find kind of those alternative ways to get that culture and that trust across?
Sure. Firstly, thanks a lot for this interesting session and an opportunity to be here. My name is Maneet. My venture is called as Lalten. We are a B2B technology platform for rural SMEs and artisans across the country. So we connect them, we skill them with better products, contemporary products which global markets want. And we take their products to global markets, retailers across 18 countries. So we work with artisans which make textile-led products like home furnishings, apparels, and connect them to buyers like Zara or Anita Dongre, Fab Indias of the world. That's what we do. We have been doing this for the last 4 years now. And our journey has been very interesting for the first 3 years, and in the last 1 year, it was very different. Again, coming back to the timelines, in March, the country was under lockdown. We also realized the pandemic could affect our business. And just before that, almost in the month of February last year, we invested into going to a B2B exhibition with our products. We worked a lot to create better products for European markets, and we visited Frankfurt with our artisanal products to reach out to global at a stage where global buyers can look at us. And then Europe was the first to get impacted, and then Asia with India being impacted in the lockdown from March onwards. And I have always been a true believer into running cash flows in the company. And the first thing which we did as the country was under lockdown and we were at our own houses was to reach back to all our buyers. And the buyers are the first investors. So if you have money keep coming in from all the buyers, I think then the panic mode is not yet there. But unfortunately, since we give our products to mostly the offline retailers, it was a situation of distress for us as well, wherein we didn't know how our revenues could come up, and no one knew how we would be able to maintain our cash flows. So one thing which we did was to structure a more efficient way of communicating to our buyers and understanding what demand patterns they are looking at and where we can suffice them. And second was in terms of communication, we kept very clear and transparent communication among our employees and with all our stakeholders, investors as well. So we reached out to them, we told them that this is what the market is telling us, and this is what we have been able to still create impact in a very minimal scenario. But we are looking for help, and if there's anything which you can suggest us, then that would be great. And we have been fortunate to have good, empathetic investors. They reached out to us. We were on weekly calls with them, giving them each and every update of what's going around. And I would say with that, we were able to structure the right strategies. We were able to cut down on our expenses and eventually mitigate risks where we were bleeding in terms of cash. So I think I agree entirely there that it was a little different year for us. But luckily, the country is behaving better than what was expected. Right, people are on the streets. Unfortunately, not with Maharashtra, but the rest of the country, people are on the streets and the markets are behaving better, and that's a positive side for us. And we have only grown by almost around 80% than our financial year revenues last year, this year of COVID. And the coming year, we are planning to grow by almost around 4.5 to 5x. So, and I think all of that has been possible because of a lot of other initiatives which we did and hustled our ways to create some innovations in technology and operational models, as Megha was just suggesting. And I think that's creating much more efficiencies for us.
Yeah, and maybe that's great. I mean, it's great to see. This is a perfect example of what I was talking about earlier, like how be upfront about how you've what were the issues that came about because of COVID. What were some of the strategies that you've employed to address that? So when presenting to future investors, kind of being able to own that narrative and not just be on the back foot and trying to kind of explain, so draw out how this has positioned you for future growth and the stuff that you've done in the meantime to kind of stay afloat. That's great. I want to pick on something specific that you said about the related to growth and finding some of those new buyers, right? Like because you're working B2B, it's a little bit like finding investors. So did you manage these kind of relationship brokerage and situation in the COVID era, right? Like if you can't meet them, if they can't go to see the products from the artisans in the showrooms, like you were discussing, kind of how did you bridge that to get them onboarded on your platform?
Yes. No, I think I was just thinking, as Megha was also speaking, that as everyone from investors to investees, everyone has created efficiencies. But there are certain other areas, maybe the social areas or the cultural areas, where still we have not been able to bridge those gaps with technology. And we have been able to raise 2 rounds earlier. And whenever I speak to my investors, they have always told that they invest on the founders more than, and the culture of the company more than the idea. And I truly believe that rapport and understanding comes with strong relationship which we have with them, and it takes time, right? So it's not something which could happen over weekly Zoom calls. And I remember meeting our investors at SOCAP for continuously 2 years, and at Sankalp, and then at Unconvention as well. And the more the people see you, the more the people know about your good work, and that's how relationship starts building. It's about a relationship which you have with your parents, or with your wife, or with your buyers, or with your employees, and similar relationship which you have with your investors, which eventually builds over a period of time. And I think in that context, I think it has been a little challenging, wherein this year, SOCAP, Unconvention, Sankalp, and all of this forums were primarily online, in an online format, right? And that's where we do not eventually connect. And the fun of hustling on the floors of these conferences was immense when you have been there, you were there. So I think in that sense, there has definitely been a lag. But I would say that as we are also looking to raise our next capital round of Series A, we are well prepared. And as you have taken through your presentation as well, that it might take some time. We are well prepared. Generally, on an average, it took us 6 months to raise capital earlier. The last 2 smaller rounds which we did, a seed and a pre-series A. But I think this time it might take us maybe around 8 months or even 10 months. So we're preparing ourselves with enough runway, and also preparing ourselves with a pre-DD stuff, right? Wherein we are prepared with, so you're doing a pre-DD with an outsourced party, so that we already know what the red flags are. We tell honestly and communicate it transparently to our future prospective investors that this is where we are, and in terms of financial modeling, pitch, and other things. So I think it's more about building that trust rather than anything else.
Yeah. No, it's such a good point on the timing front. We always say when we whenever we're talking to potential clients from our perspective, what is your runway? Like, how urgent is this? Because if it's, I mean, it's unfortunate, but you never want to be at the stage where you're raising and you need the money next month or today, right? You want to take that 6 months approach, and even more if you can, obviously, like you were mentioning, possibly 8-10 months. But I want to switch back to Mega and kind of pick up on the point that we're not meeting in person for this conference, and I know that's often how we interact, we find investment opportunities. So how is Insitor kind of adapted to that from a sourcing perspective? Like, is there anything that you're doing differently to find a potential pipeline? And then also kind of on that trust point, once you've identified someone you're kind of courting, is like, what are some of the things that you can do to address the fact that you can't meet in person to establish that trust?
Sure. So, Francois, VC industry was quite quick to adapt to, the new reality of life working online. And frankly, we have had a very, very healthy pipeline. We have people reaching out to us directly on the emails, we have people reaching out to us on LinkedIn, we have people reaching out through several, there are a lot of conferences and webinars happening online. So I think there is a lot of opportunity to interact now online. They have found ways to reach investors. In fact, I would say the pipeline was probably more healthy for the last 2-3 months than what it would have been in the past 1 year. So that way, I think the run has been good in terms of pipeline. In terms of the trust factor, see, it's a very difficult question again. We do not have the right answer for that. We can try to supplement it through various ways. Like I mentioned, we would collaborate more. What I would like to do is, probably if I have an advisor who's closer to the company, I would have them visit them and, get inputs from there. Or, I would like to have a video kind of, call with them where they can take me around the office. They can show me the operations. I can meet more team members. Earlier, if I had focused on talking more to the co-founders and the management team, I would focus more on talking to more employees in the company, just to, get the feel of, the culture, etc. So I think those are the ways in which we're trying to, get a comfort with the teams and the culture. But again, it's at some point it has to go back to the normal. I think that's not the most efficient way really to do it.
Yeah, thanks for that. And I think that point around meeting the employees, that's obviously like something that would happen if you're just walking around someone's office. So obviously, missing that interaction. And if I can bring that back to also the point around that we were talking about earlier on the impact front. What have been some of the ways that you've seen that potential investees have addressed trying to convey that impact story, since you can't go visit, for example, a school where there's an ed tech product at play or something like that, right? Like what are some of the best ways, most innovative ways that people are communicating that impact story?
Sure. So, with a lot of funds, we have seen very good videos on the impact. We've seen videos from the school, from the sites, from students studying, or, the logistics, etc. happening. So I think those videos have really, really helped, just from the broad understanding also, just to get a feel of, what really is happening on the ground as well. Otherwise, from the impact point of view, that's, it's just the way that we've evaluated in the past. We cannot do field visits, but I think those videos, sometimes those interactions with, the potential target segments, the school kids, the parents we've had calls with. We've had calls with some of the suppliers, some of the customers of these startups. I think those things is how we have tried to evaluate the impact, really.
And do you find that potential investees have been more open to facilitating those in this context?
They're very, very open and they're prepared for it. So, that's something which is very nice to see, that they're prepared to offer you those calls, those interactions, those videos. They've been very, very upfront about it, forthcoming about it. Sorry.
And maybe turning back to you then, kind of the flip side of that, what are some of the ways that you've been able to keep track of the impact that you're having and convey that to your existing investors but also potential investors?
Sure. So in terms of impact, as I said in the beginning, that our first job as we were in pandemic was to reach out to all our buyers, understand their demand patterns, how panicked are they, and when they look forward to put orders to us. Similarly, the sourcing team, which looks after the impact side for us, the supply side actually, they were in constant touch with all the micro entrepreneurs we work with, and understand the level of problems they have, and we facilitated and it's a time to earn trust as well, right? So we actually facilitated them with some working capital, some advance orders, so that they were continuing to do some samples when we didn't have any orders for them as well. And also in some of the cases facilitated them with some grains and household products as well, like oil, grains, and sugar. But I think communication was one thing which I learned that has to be there to and fro with the buyers, investors, and with the stakeholders, which are the artisans, and it has to be very transparent, and more often it has to be done. And as we have our financial matrix very strong, we also have a focus on our impact matrix, and we made sure that we are sending it across to all our investors monthly. We then started creating a common stakeholder call as well, wherein we got all of our investors on a common call and told them that what we are doing. We created pitch decks similar to the pitch decks which we sent in the first meeting with the investors, but now pitch decks were happening every month about how the company is structuring, what we are doing. With respect to the prospective new investors, as we intend to raise our new round, I also truly believe that building that trust is very important, and that confidence which the investor should have, and it primarily comes when you meet them in person. Right. And one thing which I would try to do is that I've tried to look out for their portfolio companies, or any network through which their portfolio company's founder, if I could connect to them, and then they can put a word to that investor. So eventually that creates a little more level of trust and confidence when someone from the portfolio reaches out, rather than me writing a cold mail or a cold message on LinkedIn. So I think that's what I've been trying to focus. If and the impact community is not as big, at least in India. So I think the entrepreneurs and investors are well connected in the network everywhere to know each other.
Yeah, again, that trust point I think is always a cross-cutting theme. I see there was one comment from someone in the room that I think is worth addressing. We've been talking a lot about how difficult it is to establish that trust and to make those investment decisions over Zoom. But deals are happening, so it's worth acknowledging that. And actually, especially in the VC space, and globally, we've seen that the activity is there, and there's actually quite a bit of interest. So maybe going back, kind of with that framing, and thinking a little bit about since the deals are happening, how are the deals different in terms? Are you shifting to different products? Are you maybe looking more for convertible notes rather than equity rounds, for example, since it's hard to set valuations? Are you, if you're a debt investor, are you, a little bit more risk averse and looking at shorter durations, or what have been your experience? This is a question for both of you on how this has impacted, the deal terms, since we know the deals are still happening.
Sure. So, Lorenzo, from our perspective, I see the current times as a very interesting time to invest. A lot of startups really have learned to, control their cash burn better. They've started focusing on the unit economics because of the whole COVID situation. They've started focusing on technology for efficiency, for outreach. So I think there are a lot of good and positive changes that have been happening, in startups across the sector. And from our perspective, I think technology has become a key piece for investment now. How do you leverage technology? Because in a post-COVID world, there's no running away from technology really. So, we would always like to see startups supplementing technology to bring those efficiencies, etc. I think that's one. In terms of the valuation, I think the valuations are really back now. However, during the 4-5 months in between, the valuations were really down because a lot of startups that were looking to raise Series A, finally went on to another seed round, etc. Where the valuations were not increased really. So I think that's what had happened. But that was also very sectoral in nature. We have seen a lot of positivity around edtech sectors. We've seen a lot of positivity around the food and grocery sector, around the health tech, etc. So those have maintained throughout even the last 10 months as well. And I think valuations are pretty much back, and we're really now resuming normalcy, in all aspects of our investing.
I think a lot of people in the audience are probably, happy to hear that, and certainly wishing that that's true. Just a quick reminder to the audience to keep sending us some of those questions, and I'll feed them to our panelists here. One thing that we've heard from investors is definitely what you mentioned, Megha, on this kind of growing appetite for some of the sectors that saw huge positive tailwinds coming out of this, right? Like ed tech, I think you mentioned health tech, you mentioned ed tech for sure. Maybe this is a little bit of a tricky question to address on the fly, but I wonder how, in this context where there's appetite for kind of these new sectors that really didn't see actually that much excitement before, how do you then get investor excited about your model, right? Like something that was getting traction before, but in the COVID context might have been less of the kind of new sexy new toy. How do you go about convincing them that this is where they should be?
Sure. No, definitely, Ranjoy. I think to look at it, I think definitely pandemic has, in the first place, for us as well, we have been able to establish right financial control and establish right numbers up there. But our sector is not a sunrise sector. So sunrise sector initially have been the health tech, education, wherein there was a clear fortunate demand, unfortunately with the pandemic, right? But I mean, very interestingly, what we also realized that we went back to our beneficiaries, artisans, and we understood that the community is big enough, and the community is more than 9 million across the country, and all of them are struck right now with not being able to sell their products into local markets and the exhibitions where historically they have been going through. And it was quite evident for us that we have to move to technological solutions. And we took 2 steps back to understand the pain points which these artisans were having and what we could do. And we created technology levers wherein we created mobile CRMs for these artisans to create their own stores within 5 minutes online, and eventually digitize their inventories so that we can liquidate their inventories to different B2B, B2C partners, maybe Amazon, Flipkart, Etsy, India, and so many of the others, and create market opportunities for them. And in all of this entire thing, the entire market opportunity for us as well got unleashed and become much bigger, which we didn't envision until last year. So I think, and I totally say that we are more than a sunrise sector today. We are in a sector which has more than 9 million artisans on the supply side. We have a demand on the other side, which is more than $80 billion globally, right? And I think it's one of the sectors where technology has been long due. And with COVID, I think we have been fortunate to work, hear the feedbacks and work on the solutions which our artisans and the sellers were facing as a problem, and create and unleash a better market opportunity there. So I think it's an opportunity for any other investor to get into it and make it big as an impact and as an opportunity for the sector as well. You're on mute.
Always do this. Still after a whole year. That's a great point. Like these people's livelihood, sometimes it's easy to forget behind the technology that they're it has a real impact. So kind of kickstarting that back and getting that like revival of this industry and an income stream for them is hugely impactful. So I think that's a great story to convince investors. We have another question with regards to how do investors view dips in sales or revenue, and if there were some pivots that were made during the pandemic, is this considered a lack of focus or resilience? So maybe that one, Mega, is for you. Kind of how do you take into account the pandemic and the financial performance of the last year, and how do you talk about or think about pivots if they happened?
Sure. So, Franco, from a portfolio point of view, we have been working together with all of our portfolio companies very closely on the whole cash management, the dip in sales, dip in profitability front. So we've been very cognizant of the fact that things are not going to be the way they were before the pandemic, and we have given a lot of leeway to the companies that we've invested. In terms of the new investments, we very clearly look at a business model which is post-COVID. None of us really know the timelines for it, when we are going to come out of this situation. So, we keep that, we do that scenario analysis on most of, the financials that we look for in the new investee companies. And we try to see, we try to have a very clear plan pre and post-COVID situation. So I think that's what we're trying to do for risk management. We're trying to stress the financials as well, in order to have some comfort on that side, and that's mostly it.
Thanks, that's helpful, and I think most, at least from our standpoint, that's also how we've presented it, right? Like, let's not kid ourselves that some of this performance was not impacted. Let's be forthcoming about this and talk about the things that you've done in the meantime to try to address that and stay afloat, etc. So again, that kind of forthcoming, and will also help build trust, that we've been talking about. So so for folks out there, just don't try to hide it. It will come out anyway.
We really appreciate if the founders and the team is very upfront about the challenges that they're facing, and how they're overcoming that challenge. So in the presentation, I think I would like to see that in the first 3-4 slides, and I think that's give a better confidence to us, as an investor. So I think it's always good to be forthcoming about the situations that have been created because of the COVID.
Great. with that, I want to thank you both. This was super interesting for me. I hope it was also for the audience. And thank you for taking the time. Maithili, do you want to say a few closing words?
Yeah, thank you so much. Thank you, Francois, Megha, and Maneet for a great session. Also, big thank you to all our participants for being such an energetic and engaging audience today. We hope today's theme of building bigger stayed true to its name. Do join us tomorrow for our last Power Pack Day of Unconvention on building meaningfully. We look forward to seeing you all again tomorrow, bright and early at 9 a.m. Till then, goodbye and good night.
Thank you.